I do have some slides here. So I know Jitun have interesting slides. I will try to beat him on terms of like my slides as well, right? So I guess everybody here will, I'm sure you guys will be talking about gold, right? Like gold price. So I'm not going to ask them to explain why, and how we invest in gold, because like if you ask anyone, they have their own stories, right? But I will get them to answer whether they will buy gold right now or not towards the end of the session. We let them think for a bit, right, for the next 20 minutes. But the next questions here is very important. They all talk about, Jitun talked about geopolitics, James, roughly not too much touching on geopolitics, but I would like to touch on Malaysia, right? So we all read news, and even if you don't read news, you'll come across of these kind of pictures, right? So our government have done a lot, right, over the past, at least 1 year, right? Look at the effort, right? You have the president of China came over, and you have president of US came over, right? Then our prime minister is meeting Russia, Putin, right? So what is going on, right? And then I want to link it to why are these things happening but not reflecting in our stock market, right? What is going on? Like, should we as investors pay attention to all these things, or should we pay attention to other things, right? So, Jiaying, this is for you.
Sound check. Okay, so I start.
It's a tough question. So.
Okay, so politics, everyone loves to hear stories about politics. But frankly, in my opinion, as long as politics don't interfere with business, that is the best, right? But I think nowadays, this day and age, we cannot avoid talking about politics as well. It does become a consideration. So what I think our Prime Minister has been doing is really trying to play a very delicate balancing act between different global powers. So far, we are still okay. I think we still did a good job. That's why I think so far our economy is still growing well. FDIs are coming in. So that, in that sense that, politics are not really interfering with the economics. So we are actually growing quite well.
Right. So I think lead to my next questions, which is for Chuan Yao, is that he mentioned earlier on that Singapore as a global hub, right? We all know about Singapore for the past 10, 20 years, right? So with these kind of pictures, are we becoming a global hub for Malaysia? Are things like changing towards that direction, right? I'm not too sure. I think Singaporeans will still defend their own country. So I'm not going to ask. I'm not going to ask you. I'm going to ask Jiaying. Are we starting to become like Singapore? It's like 10 years, 20 years later, so we should invest now?
I think it's a bit different because Singapore will never have the land that we have, right? Right? In terms of resources, I think each country has their own strength. So that's why the Johor Singapore Special Economic Zone is a collaborative effort between both governments, recognizing that each of us have our strengths. Why are we fighting over each other? The world is our oyster. Let's partner together and take over whatever we can, right? Singapore has their expertise. Malaysia has our resources, and we also have the ecosystem. So let's work together, right? So there's no need to fight over, or you take it or I take it. We can actually, there are cases where Singaporean companies, their HQ is in Singapore, but their manufacturing hub is in Johor. And I think that works quite well for both countries. So I don't think that's a problem.
Yeah, so I think I will just move like a few slides to, this is China, and since we are talking about, fighting, I think Jitun mentioned through his slides, he's talking about a lot of fightings here and there, basically China, US. So I'm just wondering, is it just fighting or there's love too, right? Trump always said that Xi is his best friend. So are things changing? Should we be? Are there areas that they're working together? Just want to clarify on that. Yeah.
Sure. I think the upside of what we have seen in the whole recent Trump administration is that I think the pressure on China is not as bad as what it was initially thought, right? Both from a relative sense as well as from an absolute sense. Okay, relative is in terms of the tariff war. initially, I think a lot of people were thinking that the tariff will be against China and China alone. But from April of last year onwards, we finally saw the true colors of the US. So it's mega lah, make America great again, and the small print is at the expense of everybody else, right? So I think it's US versus the rest of the world. So, and once we have that, then it's a matter of relativity, right? Because if you see the tariff rates that they have imposed on the likes of the ASEAN, of our ASEAN brothers, you know that it's about 40%, 30%. It's high, right? So relative to the Chinese space is still lower, but relatively speaking, China is not that far off, right? So I think that's a very different mindset from what people were expecting pre the tariff war. So that's one. So in the absolute sense also, I just want to highlight that people were expecting the worst. But what is happening now is that I think Trump has been less on China's case as what compared to what people have been expecting. In fact, it's the allies that they have to worry about, right? The likes of Mexico, likes of Canada, and now Venezuela is involved, and now Denmark, Greenland is involved now. So I think the pressure is off, right? I don't think Trump can open up so many battlefronts on so many different geopolitical arena, right? So, and if you look at it from a lot of countries' perspective, right? Obviously, you know the saying, right? The enemy of my enemy is my friend, right? So if Trump is going after them respectively, then they have to think about it and say, then where's the other big brother that I can turn to, right? Maybe I shouldn't be as nasty to China than, compared to what I've done over the course of the last few years when Biden was around, right? So things are changing. So I guess, like I mentioned, from a relative perspective and from absolute perspective, I think things are very different over the course of the last few months.
Right. I think everyone will, even me myself, I got a heart attack, right? Last year, heart attack, right? In April when the global stock market, I think everybody remember. So I think the questions for, audience and me also is that, are we like all good? It's like, it won't repeat like those kind of scenario. It's like China, US, like suddenly openly kind of talk about each other and get everyone panic.
Sure, I think the US-China tension is here to stay. I think it's inevitable that these two will compete, right? Let's hope that they will never fight, but they will compete, right? So the tension will always be there because we have a traditional incumbent big brother that has been the big brother of the world since World War II. It's now perhaps slowly losing its grip on the rest of the world. And you couple that with what Trump is doing, right? Things are changing, right? So I think the competition is here to stay. But the way they compete, I think will be very different. Because like what I say, right? Trump cannot afford to open up too many war fronts, right? With too many people at the same time, right? And the big change in a lot of the global leaders' mindset must be, I used to be very pro-US. But now he's thinking about taking over my country. He's thinking about, invading the neighbors. Then what should I do? Should I still be pro-US or should I be a bit nicer to China, right? So once again, going back to that point. So all this means that I think the pressure on China may not be as bad as what it was during Biden's time, because Biden was very smart. He gathered everybody and they can bully one guy. But now China, the US is saying, I'm the bully. Nobody else is a bully. I'll bully everybody, right? So the thinking is very different.
I guess the message I get from here is that there will always be conflicts, but as long as both countries are actually investing and focus on productivity, innovations, and growth, that would actually translate into economic growth and stock prices. That would be the, key message.
Yeah, so I think they'll definitely try to cooperate in ways that they can. But I think right now, it tends to be quite narrow, right? There are not many places whereby both countries overlap and can cooperate in a healthy sense, right?
Okay. Then I have a very quick questions on now China and US is getting better, right? Things are moving up. But why is Japan, right? The stock price is still going up when there's friction between the two leaders. Can you help us to understand? Should we just ignore this?
I think you can't really ignore this. Of course, this is much closer to home. And I think Takaichi, even before she became elected, has taken a more hawkish stance on her relationship, on Japan's relationship with China. Um, One thing to note that is the recent escalation in trade tensions or the China's export control ban is most likely going to include rare earths, which is really the sticking point and how China has used this as a leverage on other countries. It's done so in the past in 2010 during the Senkaku Islands conflict. It's now doing so again. And China has done this in the past with other countries as well. From Japan's perspective, to be frank, there are limited moves at this current point to reduce the rare earth reliance. So if this trade tension does persist, over time, the impact on corporate profitability, exports, its domestic production will be affected. And I think Takaichi has always been more pro-growth. She wants to push for a higher growth economy. So I think she understands that she can't really afford to fight this one out to that extent as well. But at the same time, she is trying to figure out, or the government is trying to figure out ways to reduce its reliance on rare earths on China.
How is the Japan new prime minister? How are the citizens, like Japanese, think about her? It's like with all these things that's going on, right?
She's pretty well loved, more well loved than her predecessors have been for quite some time. Her approval rating after 3 months is still in the low 70%. That's not something that has been really easily achieved by her predecessor. Her policy platform seems to be garnering quite a lot of public support. But with that said, of course, how she handles relationships with the US, with China, how she manages the inflation issue, which is really one of the key issues why the ruling party lost the upper house and lower house election over the last 12 months, last 15 months. So that is going to still really dictate her approval rating moving forward, which is also why you hear rumors about, Takaichi wanted to call a snap election for the lower house to regain that majority. But of course, that is still to be determined. But right now, yes, she's quite popular amongst the public and
Right.
amongst corporates as well.
Right now, lastly is on Singapore, right? I think Singapore is basically a global hub. It's like they're neutral, they're friends with everybody, right? So, and their focus has been on like what Chuan Yao said. The Monetary Authority of Singapore, which is the Bank of Negara Malaysia equivalent in Singapore, they're pumping money into the stock market. That's like crazy, right? So can you talk more about, like, share with us like what is going on? It's like why are they doing that, and are you guys really insulated from the global geopolitics, like supply chains movement that everybody was worried about, has been worrying about, and you guys are doing your own thing?
At first, I thought you were going easy with me on the question, then you threw in a geopolitics one. Okay, the easy one first. Let's talk about the EQDP. It's quite a simple thesis, right? It's at the end of the day, the government just wants the Singapore Stock Exchange to be a viable exit route for Singapore companies. I think what really, I would say ticked them off, but what really triggered it was when you saw C and Grab both go to the NASDAQ to list, right? You have multi-billion-dollar companies that could have been Singapore listed, really drove investor interest, decided that Singapore, despite bidding their Asia global headquarters, they are not going to list here. And it's not just them, right? We've seen a spate of companies delisting in Singapore, either going private or just relisting or brand new listings in the US market. The NASDAQ has just been this big black hole sucking up all the equity listings in the region anyway. So I think that's why they came up with this policy. It's more, I wouldn't say it's sort of boosting the market. It's more like a pump priming, right? You're trying to get the flywheel started to get that multiplier effect coming through the market. And I think we're starting to see that effect come through in the past year, and hopefully more to come this year. So I think that's EQDP in a nutshell.
Now, I think moving on to my next section is that after listening to their session, like past about 4 hours, a few hours, 2-3 hours, right? I really feel that I need to invest more into these markets, right? But probably like, I don't know, it's like what percentage. But in my heart, I still feel that, it's like there might be something wrong. It's like, what could go wrong? It's like, it's like Singapore, your central bank is pumping money into the stock market. why should I not participate as well? It's like I can't let your your bank just benefit from it, right? Like you mentioned, is that the valuation is still low whatsoever. So what could go wrong?
I think now I have to look over to the global side. Unfortunately, I
I have
think
I have a lot for Malaysia.
No, I think okay. The biggest black swan will always be what Trump does with the rest of the world, right? We've seen Liberation Day. Singapore was not spared. Singapore market did fall 20% during that period. We did recover quite rapidly as with the rest of market. So I think that's the number one black swan. If you look at outside, more domestic, I would have to say everything's looking pretty rosy at this point in time, excluding, all else equal, as long as we don't go into another global deglobalization or war scenario. I think we should be fine this year. Interest rates are low, currency is strong, and we are past the election cycle, thank you. So Malaysia has an election cycle to contend with at least for the next 2 years. So yeah, I think we're pretty all right. We'll see what the other guys have to say.
Yeah, Malaysia is like, what is going on is, I think it's been pretty bad last year already. So can it be worse? Or what can be worse?
I think we have hit rock bottom probably last year, especially in terms of when it comes to the broader market. But of course, the black swan is always, I don't think it's something domestic, but rather, international, because those are the things that we really can't control. It's out of our hands. So what Donald Trump says or what Donald Trump do, what can we, how do we react from there? And I think let's not forget that this November, they have the midterms election. So by maybe closer to the election, will he talk more aggressively? Will he try to posture himself again, the MAGA rhetoric and these things like that? Does he act on what he talks? That's another even more important thing. So I think that investors should not be surprised by now that he may talk a lot of things, but he may not follow through. So we may, who knows, some volatility in this year, especially with their markets at quite an elevated stage. And if they correct, we might also follow suit. But I think investors should focus on the fundamentals and see how we just stay calm. I think in times of volatility.
Yeah, I think when things are cheap, I think it's quite not that difficult, right? When things are cheap. When things are getting more expensive, that is where I think a lot of investors get more excited. We organize events over the years. When market is down, right? It's a quite empty one, right? When market is going all the way up, then it's kind of full house, right? So I think my next topic, the next question is on to Jitun. Is that China, like he said, China has gone up over the past 2 years. And I think 2-3 years ago, a lot of investment firms, global investment firms said that China is uninvestable. And then now suddenly everyone jumped into China, right? So my question is that, what is stopping investors adding more into China or buy China right now? Right? Is there something that investors are holding back because they are afraid of things that were 2-3 years ago? They're still
Yeah. I think just to use your earlier analogy, right? What Warren Buffett said, right? Be fearful when others are greedy and be greedy when others are fearful. So if you think about 2-3 years ago when everybody was saying that China was uninvestable, I think that literally marks the bottom of the bottom, right? Because everybody was selling out, right? And you have the guts, or you actually can say that China is uninvestable, which is unthinkable just about a decade ago. How can you even say that? But now, so essentially that marks the bottom of the bottom because it's become mainstream. It's okay for you to say China is uninvestable. And that essentially, like I said, marks the bottom of the bottom, right? And then to us as fund managers, I think we are more excited when the market is cheap, when market is inexpensive, and when everybody hates it because we got valuation on our sides. Right, so I think that is the main reason why I think China has done very, very well. And if you look at what I mentioned earlier, I think your question is, can China go even higher? I do think that if you look at from a historical perspective, China is still very cheap compared to history. And now what has happened is that now we have the added AI angle, which we never had prior to January of 2025. So it's just barely 1 year into the China AI story, right? Because prior to that, like I said, OpenAI and NVIDIA, they were the kings. They were the champions. That's why at that point in time, they talk about the US exceptionalism trade. So once again, you dare to say that it's US exceptionalism trade. So therein lies the rub, right? Because everybody is in, and therefore people are dare to use the word exceptional. And that's the only trade, and they are the king of the hill, right? So I think that's what makes investing so interesting, right? And like what you say, when nobody likes it, the whole floor is empty. When the market is hot, the whole floor is full, right? So yeah, I think that's what we are seeing here.
Right. So Japan past 1-2 years, there was always like some sharp news, but the market just rebound very sharply. But it gives you like some heart attack, like 1-2 days or like few days, and then the next week is like, oh, it's BAU, business as usual, right? So what could go wrong? Like Japan, it's like I think the only thing is that what I can see, I'm not too sure whether you guys realize when Chuan Yao talk about interest rate decline is good, right? Everything is like, borrowing cost is cheaper. It's like the market is like excited about it, and then it's like the banking business, like the wealth effect, right? But interest rate going up in Japan, how can that be good, right? Probably it's like whether that is a key risk, or do you think like there's other things that's like much more that we should actually watch out for?
I would say on the topic of interest rates, Japan is coming from a pretty different angle from a lot of other economies. Of course, I would agree with you. General knowledge is that interest rate going down typically stimulates more investment. People are typically more incentivized to be spending, investing, etc. But in the case of Japan, when you have inflation now at about 3%, negative rates happened between 2016 to 2024, negative rates, and now it's only at 75 basis point inflation at 3%. When you look at the economy's real interest rate, it's actually still very much in the negative. So it's actually the financial conditions in Japan are still very accommodating. Now, why is rising interest rate, at least in the way that Japan has done it, a positive thing? It's because typically they're doing it very cautiously, very gradually, as the governor always says, is data dependent, because they want to manage the inflation level while making sure that the rates can go up in a very well telegraphed manner to avoid market disruption. So Japan, regardless of where it is now in terms of 50 basis points, 70 basis points, or maybe some people are saying 1% or further this year, it's not really going to have a significant impact on companies wanting to deploy their money, invest, and continue to grow in their companies and continue to push for more profits. And so in that sense, interest rate is more, it's a bit of a different story in Japan compared to other places. And in terms of just black swan event, I think, as I would just mirror what other people are saying, the geopolitical side of things cannot be ignored, especially given its proximity to China, Taiwan, and some of these places as well. So it is close, but at the same time, I think Takaichi, the new prime minister, is very much aware of the position Japan is in, and its relationship with China and US will dictate a lot of the growth and the trajectory of Japan's economy moving forward. So I think that's also something that she is very well aware of when she decides on her policy direction.
Okay, now that we talk about all those scary things, let's move to something more exciting, right? Why should we buy? Oh, this is Malaysia, right? You look at Malaysia stock market, like Jia Ying mentioned earlier on, it's pretty boring, right? Why should we do it now, right? I know that earlier on he presented a lot of things going on in Malaysia. It's like a lot of talks, right? You can talk a lot, right? I mean, but I still want to see like the numbers, right? But is it like the talking is leading to action now? And you also mentioned like we are in a sweet spot, right? So I think as an investor, like me and the audience would want to know that what needs to happen for Malaysia stock market to move higher, like from now onwards? Like what do we need to see?
Okay, I think one of the biggest misconception about Malaysia stock market is that we always look at the benchmark. We always look at FBM, KLCI, how they are doing. In fact, some of our government funds are so obsessed with KLCI. You can see like literally last month, there's just some magic happened, right? That we managed to close positive in the last month, despite most of the year we were negative. But I think where we are different from markets like US, you see there are biggest companies are dominated by tech companies, which are growing very, very fast. Ours are mostly in the traditional industries. Like you're talking about banks, you're talking about plantation companies, you're talking about telco companies. These
Actually,
companies,
that leads to my next question is that you're talking about like humanoid robots might replace you next year. So will AI and humanoid robots replace Malaysia? Because where are we in the supply chain? Do we really have companies that we can invest in, that you're investing in, that benefit from all this like AI and robotics?
we do have. It's just that we have to look harder. You see, the challenge here in Malaysia is that the returns are not easy. We can't buy like, US ETF, you just buy US S&P, your SPX, QQQ. You are just sitting there reaping your 8, 10, 12% a year returns. If we buy Malaysia ETF, you are going nowhere. But actually the hidden gems are at your second tier, your mid caps, your small caps. These
So
are the companies.
in short, you are in the hidden gems.
in,
That's where you spend more time analyzing on.
in a way we have to.
Yeah.
Right? It's not as easy as our friends in US, just buy Nvidia, buy, Tesla.
In short, there's like a lot of hidden gems in Malaysia, right? But you need to pick a fund manager to look for you. It's like get the stocks for you, right? So that's Jiaying. So Jiaying, I think you mentioned about your track record, right? Like 3 years, 5 years, 10 years. Can you talk about how are you? Were you there? It's like I'm not. The audience like wouldn't know like whether you're new or how long have you been in the company? It's like yeah.
I've been in the company for too long now.
Yeah, it's too long. Okay.
I think it's my
Okay, I think that's good
year.
enough. It's too long, right? So all the awards, he contributed a lot to it, right?
I think it's
so
our
you guys are
team,
insane.
right? It's not an individual effort. I just want to emphasize it's our team, and it has been quite stable for a long time. You should know, lah.
Yeah, I know. Yeah, I just want to like share this point across, right? So I think the next market is Singapore, right? I mean, you have already shown the chart, right? The performance chart. Is it too high for us to get in now? It's like I'm quite intelligent to know like it's actually quite high. It could be higher, right? I mean, is the Singapore is your central bank going to pump more money?
I'd like to say one line here. Past performance is not an indicator of future performance. No, but okay. Reality, right? Market's trading at 14 times today. It used to be at, say, 12-ish, just 2 years ago before the run-up. It's moved up 20%, even though the market's up 60. Why? Because earnings has come up, right? I think, end of the day, any market, in order to sustain that continuous trajectory upwards, requires EPS growth. That's what the US market has done. That's what most markets that have gone on this direction has done. So the question you need to ask is, can those companies in Singapore deliver that earnings growth? And I think one of the big change is the mentality of the people running those companies. One big shift from that decade of lost performance in the 2010s is most of the management teams have changed. And with that, KPIs have shifted. In those days, there's a lot of focus on, I would say, empire building, bringing the Singapore name out of Singapore, building the brand. Today, the focus is really on returns of equity, capital return to shareholders, and really, are you making a return higher than your cost of capital? And that, I think, is one of the biggest shifts in mindsets for the corporates. And that, if continued, and assuming, touch wood, nothing happens on the global front, no more war starts in this part of the world, we should be all right in Singapore.
Right. I think China Hang Seng has been like, it's like, I mean, it's still low. It's like, I think we have gone through that. I'm not going to delve more into that. I think we all know like what is going to drive China. G2 have shared a lot, right? I think maybe Japan. Japan is sort of the same thing. It's like it has been keep going up, right? It has been the darling of global investors, even like to us, right? So what else needs to happen is like, I know that Singapore, you have the central bank pumping money into the stock market. And Japan, you have the corporations like doing the buyback, pumping money into the market. They have like huge money pumping into the market, right? So do they still have money to pump into the market? Is that what needs to happen?
Yeah, so that's what happens when you've been saving money for the last 30 years. You typically do have a decent amount of money to spend. They have been spending quite a lot over the last 5, 7 years especially. But they still have a decent amount to spend. And I think that extends beyond just the large mega caps, even some of the smaller companies as well. They have a lot of cash. the management has been very complacent with sitting on a lot of cash reserves. That is starting to change. So we still see quite a bit of in terms of momentum and a bit of that driver in terms of companies using their cash to try to either benefit shareholders or to grow the company.
I think maybe I just add on to Japan is that Warren Buffett recently, there's a question asked to Warren Buffett, right? He said that he's not going to sell any of his Japanese stocks for the next 50 years, right? And then later on he said that probably forever I wouldn't sell it. That's what he said, right? So I think there's a comfort that global investors can have, right? So that's on Japan. And I think moving on, I think I need to touch on currency, right? Do you guys agree? It's like my time is, I already ran out of time. I think I need about 5 minutes to talk about currency because it's really important, right? So Malaysia and US dollar, I'm sure Jia Ying have a view because when he invests in individual stocks, there's like some exposure. So Jia Ying, can you give us a thought? Are we going to $3 to USD? What is going on?
Okay, I think I'm not expert in currencies, but I guess what happened is the global investors are starting to recognize that we have been growing better than our peers, or in this case, against the US dollars in the last few years. But what I have come to understand is also currency is a lot, in the short term, it's more of technicals rather than fundamentals. But our fundamentals are finally starting to show in the long run. But it's also against the backdrop of dropping lower US interest rates. I think that has to be taken into context. And I guess the biggest wildcard for us this year is a potential new Federal Reserve chairman. We know he's going to be very friendly to President Trump. We don't know how aggressive the interest rates in US policy will be. I think that will be the biggest wildcard. But for now, I think the direction does look positive for us.
Right. Actually, I'm not going to delve into Singapore dollar to ringgit, save you time. But whenever I go into Singapore now, I feel like I'm prouder. It's like when I step, I'm like floating. It's like, and my head also like that. Okay. Save you the time. I think we want to go something that is much more interesting, which is Japanese yen, right? I think everybody is like thinking like, oh, yen is like, weakening. It's like everybody traveling to Japan, right? So should my investment portfolio be, it's like buying more yen, or should we just not think about it, like just hedge it and just focus on the market, right?
If you want to play safe and don't want to play the direction, hedge, of course. But at the same time, if you're just looking at the yen level, where it is right now, and what how the government has positioned itself, it doesn't seem like there are going to be a lot of catalysts for further depreciation. But on the flip side, if you're talking about near-term catalysts for appreciation, there's also, the momentum there is also lacking a little bit as well. But over the medium term, we think the rate differential between US and Japan will narrow, and that should give some moderate support for the yen appreciate.
Right. Hope you guys all enjoyed this session. I'm actually out of time. I have a list of long questions, like front and back, right? So even like I don't have time to go through Slido as well. I'm so sorry. But after this, you guys can catch them. They are very hard to catch, right? So thanks, guys. Thanks, everyone. Thanks, Chuan Yao, James, Jitun, and Jia Ying. Thank you. Thank you for your time.